Hello, chart watchers and Decision Point faithful. Welcome to this Monday, August 10th, 2020 Decision Point show with your hosts, Carl and Erin Swenlin. We want to thank you for joining us, and I hope you found your way to our new time. We are now on Monday afternoons, so you can look for us there, and I will be sending out copies of the video as soon as I have it to our free email subscribers. So let's go ahead and get started with what our agenda is going to be. But before I do that, check in with my dad. How you doing today?
I'm doing pretty good.
Yeah, pretty crazy markets these days. I will talk a little bit more about it, but we do still have those negative divergences. This is, I think, one of the interesting things. I'm sure others are noting it, but we are seeing quite a disparity between the indexes, and I think today's trading was certainly interesting in showing that disparity. We do have some sectors that are getting ready to change their signals, and Carl will be going over that. I want to take a look at gold and silver. We usually just look at gold, but I'm going to look at some of the silver charts. So I think that'll be interesting. And then I want to finish. I know I did the industrial sector last week, but I want to talk a little bit more about it because that is where my diamond of the week is coming from. And I still see some good opportunities for growth in that sector. So we'll look at those Decision Point diamonds of the week. So let's go ahead and get it started. Before we go into our information, I do want to let everybody know that on August 16th, all of our rates will be going up by quite a bit. The diamonds reports are now going to be doubled to $50 a month, but they are going to include a 1-hour trading room per week just for diamond subscribers. DP Alert will be moving up to $40 a month, and then our bundle is going to move from $50 to $80. So you might want to get in there if you've thought about subscribing to Decision Point. Go ahead and get in there, get your subscription going so that you can lock in these low rates, because as long as you remain a subscriber in good standing, these rates will never change for you. So go ahead and take a peek at that. And then I did want to mention that we are doing a free Decision Point trading room. I'm going to be starting those once a week on August 24th. And Dad, you have agreed to join us for our inaugural one on August 24th. So mark your calendars. And if you aren't on our free email list yet, you want to get onto that, because I will be sending out the links and notifying you every week when that trading room will be starting and beginning. All right, so let's start by a look at those indexes. And as I said, we're seeing a lot of disparity between them. And I think the scoreboards are pointing that out to some degree. But today we did see that the momentum shifted to the downside on the NASDAQ 100. And because of that, we lost the PMO buy signal that had just come in last week. We're back down to a PMO sell signal for the NASDAQ 100. So far, the other indexes are holding those buy signals. And actually, I mean, looking at those charts, I think they're going to hold them for a little bit longer unless we start to see consensus among the indexes and we start seeing them all kind of traveling in the same direction. Right now, we're seeing some disparity, as I mentioned. Currently, this is what our sector scoreboard looks like. Only the one sell signal in the intermediate term, and that would be energy. We have quite a few long-term trend model signals in here as well, but I believe some of those are getting ready to disappear pretty quick
Yeah,
here.
3 of them are about to change to buy.
So I know you'll be going over those in more detail shortly. So that's pretty much where we're looking at right now. You know, it's overall, it's fairly healthy. The long-term picture has just taken a lot longer to gel and get those buy signals back after the big decline. But now, still a little worried because I'm starting to really see those divergences popping up again. And we saw those same kind of divergences happening right between, you know, right after February when we had the big crash. So we obviously are going to watch those very, very closely. All right. So it wouldn't be a decision point day if we didn't start off with our candle and our daily. I'm going to look at that 5-month candle and feel free to add your comments in here, Dad.
Okay.
One of the, yep. So
No, I
one of
said
the,
okay.
yeah, okay. So we've had this bearish rising wedge, and of course, the market did not decide to execute it as expected to the downside. We actually got a bullish resolution to that bearish pattern. I usually find that more bullish than normal because it is pulling out of a negative situation. We did see volume increase a bit today, and I do continue to note that the VIX is on the inverted scale. It's staying above its moving average, and that usually identifies short-term internal strength. So, I like that I'm seeing this right now with that oscillation, the back and forth on the VIX above that moving average. I think that does bode well in the short term for now. That 1-year daily, I was watching this gap resistance very, very closely. I had thought we would have more of this type of activity going forward as it tried to make its way out of that area of gap resistance. However, we didn't see that. And in fact, we're seeing the testing of those highs that we had, the all-time highs back from February. So the market is not the economy, as I keep hearing and kind of have to agree with right now, because the market is not interested in a decline despite some of these signs that are starting to show up on the chart.
We're awfully close to an all-time high. I, we need to take a closer look at that, but yeah, it's really close if it didn't inch up there today, actually.
Absolutely. Let's see, I might be able to tell that with our handy dandy.
It's hard to get.
Yeah, so right there, the high was
Okay.
335.62, and today we did the high did go to 335.77, so we did get a little bit of a higher intraday high
Okay,
for
so
the
a
day.
new all-time high for the SPY. The S&P 500 maybe didn't make it there, but I haven't looked at that chart.
Yep, looks like the SPY did.
Yeah. All
Interesting.
right.
And there's that buy signal. So you can see that the S&P 500 and the SPY, obviously they track very closely. And you could see that we had that PMO buy signal come in last week. The NASDAQ, remember, just lost its, but we're still seeing the PMO on the SPY moving swiftly upward and making more margin between it and its signal line. So we shouldn't have to worry about that buy signal disappearing.
One thing about the thumbnail charts, so they do exaggerate magnitude because they're zeroing in. Notice that the PMO on the 1-year chart is flat, and it's when you get a buy signal out of a flat formation, it's not as exciting as when you're coming off some kind of a PMO low.
Right. And we do end up getting that whipsaw, kind of a braiding between the signal line and the indicator, in this case, the PMO. You'll see that with the moving averages sometimes. So, when you see flat, it doesn't mean that you're not going to get upside, movement. In fact, you will a lot of times get that upside movement, but if you're not accelerating that move to the high, it's staying steady, the acceleration is steady, you're going to see it flatten out. All right, so some of these negative divergences, and I know I've kind of harped on this chart a lot, but I'm still seeing those divergences in play here from that top that we had before. And from that top to where we're at now, we haven't actually gotten that second top yet. But you can see that while we are seeing some improvement here, ultimately that negative divergence is still in play, although not quite so much I see for the stocks above their 50. And right now it looks like the stocks above their 200-day EMA are, as far as from this most recent top to now, we're not seeing that negative divergence. But if you, of course, go from the top we had previously to where we're trading now, that is definitely a negative
I
divergence.
think that's where I would measure it from.
So here's what we were talking about right here. So I can take this one and drag it further. We could take this one. If I can get it, there you go. Drag
And
that
move the
further.
vertical line to the right as well.
Yep.
There you go.
Yep. So that's where we're at right now.
So there's still considerable divergence.
Absolutely. And before I totally leave this chart, that's what we watch for before these big declines. And you can see that, I mean, they're pretty right on. So it's something to definitely be concerned about right now. And what I've been telling my diamond subscribers and the people who do email me with, hey, what am I going to do here? You're saying that the market doesn't look so hot. You're telling me also these stocks that, look like they're good to buy, and really what I've been telling people is that, when you're feeling a little less comfortable with overall market conditions, like I have been, I move everything to a trailing stop. So you get all the upside, but then when it decides to take that turn, depending on your percentage of your trailing stop, it'll trigger quickly. And you won't have to, endure a large move down just because the market itself has been weak. So at this point, I haven't changed any of my trailing stops. I still have trailing stops on most of my accounts. I got stopped out of a gold miner. I've been stopped out of a few different things, but overall, I've been very happy when when they have triggered. So looking good there. But that's my recommendation when things don't look too great. Well, right now you can see that the negative divergences are in play currently, and we could actually move this over as well to mark the current high, the top that we're in the process of possibly developing. And you're still going to see these negative divergences on our silver cross and then on that bullish percent index. But I have to say, I do like seeing these turning up, especially on a rally day. We've had a couple of those big rallies, and they haven't really been confirmed by our indicators, and that's an issue. But right now, when I look at those Swenlin trading oscillators, you can see that I need to adjust these negative divergences here. But the Swenlin trading oscillators are still moving upward, which I think is great for the short term. But we are near term overbought, I would say. And we're getting as far as, further out, we're starting to get close to that overbought territory as well from some of these past moves. So it's something to keep an eye on. Of course, our subscribers will know day by day what's going on with these oscillators and what we think. But I have to say, in preparation for writing my DP alert tonight, I have to say that I find that encouraging that we do still see short-term indicators rising nicely. All right. So that was the negative divergences. I'm going to pass it over to you to talk about some of these sectors that are getting ready to make a turn.
Before I start on that, I thought it'd be nice to look at Kodak again. There was a story on it today. Remember, well, in July, they got a contract with the government. It had to do with something with chemicals to do the vaccines, blah, blah, blah. And this is just out of sight. This kind of thing doesn't happen very often. And when it comes, my advice, and it would be when you see it come out of a base like this on its stock, is it's down in it's just about a penny stock, and then it suddenly jumps up to $60 a share. That's if you were lucky enough to own it at that time. Somewhere around here it would be a good time to bail out.
Yeah, I would think so.
Because there's no, how good can it be? And what happened today? Well, the SEC is looking into this, and there was something about insider trading that they're investigating. So So here we got one of the weirdest islands I've ever seen, but it's an island reversal.
Mm-hmm.
And we could be seeing it down in the base again before for too long.
Yep.
But
So
I couldn't let that one go by.
27% loss today.
Yeah, which is, kind of a small move in the context.
Yes.
Um, okay, we have some sectors that are trying to change signals. Energy, I'm not so sure about. You see how flat it's been, and it just the separation of the 50 and the 20 right now is closing, but it's been up and down in this area, sideways. Hard to say, but it's close to getting an upside crossover, giving us an intermediate term buy signal or a silver cross. The do have a rounded bottom here, so maybe we're going to get to see some action. At least there's some resistance in this area on the gap, and then there will be the kind of a intermediate term resistance level. Okay, long-term industrials. You see the 50 getting ready to cross up through the 200 EMA, and it's going in the right direction. So that's going to happen probably to tomorrow or the next day. It's hard to judge these because they do move more slowly, and it can take longer than you think, but it's definitely within days of a crossover, and I think you could anticipate it.
Mm-hmm.
Next one is real estate. Kind of looks like the same chart, doesn't it?
It does.
And again, it's 50 getting ready to pass up through the 200, and very close. Probably will happen tomorrow or the next day. And again, this is not too, it's kind of a sideways for two months here. And it's not like you're seeing a nice deep bottom coming out of it. It's just in a trading range, and hopefully going to go higher if you're trying to go long. And then finally, utilities. And by the way, the 50 crossing up through the 200 is a golden cross. And we've got utilities. God, it looks like the same chart. But it's again, probably tomorrow or the next day. It's interesting though, you go through, it's like you see 2 or 3 different patterns in a group of charts, because just the kind of group that it's in, they all look the same in that group.
Very true. My Chart Watchers article, it was, I'll be going over that shortly, but it's 2 charts that look almost identical, and they both have, great technicals, but one does have a difference than the other one, and I'm going to talk about that.
Yeah, okay. And while we're here, why don't we look at technology, since that's where the action usually is. Now it's been pulling back, and that's a big reason why the S&P was so sluggish today. It was only up 0.27%, whereas the Dow was up 1.30%. And go ahead.
Big difference.
Yeah, and that's because this happens a lot, because the Dow, a couple of stocks will go crazy and give it an extra heavy weighting in one way or the other, and that's what happened today. So whenever I see the Dow making a nice chunky move like it did today, I always check with the broader index to see how the rest of the market is doing. And not so great. And I think that'll be wrapping
All
it up
right.
for me.
Yeah, it is interesting because when I looked at the NASDAQ 100, you know, we've got it, and the XLK, of course, looks just about the same. But now we have that island forming. I mean, there's just XLK is just technology in general has gotten kind of soft, if you will. And because it has been such a driver, both aggressively and defensively as a sector, we really don't want to see it have break its rising trend, because I think that would certainly be really be disastrous, I think, for the whole market, because it
Yeah, and
indicator.
it's, and then it fakes you out like this, breaks the trend, and then
Yeah. Well,
it's right
that
back up.
50-day
But
EMA held up. Now, I guess that's what we can start looking for.
no, I just think I'd have to hold my nose to buy technology right now because it's just nuts. If you owned it down here, great. You've got a ways to go to decide. But, you know, buying new, getting in a new position and around here, I just think it's a horrible idea.
Yeah, definitely on the side of iffy. All right, I've got lots of charts here. I would definitely like to hear your opinion on gold, uh, because I know that's one that you follow closely as well as myself. And I'm looking at our gold chart for the decision point alert, what we're covering. And I thought I had moved this. I guess this is because I think if I look at this, yeah, you can come right. We're trying to break down, we're trying to lose the rising trend. I'm not particularly, I can't say that I'm particularly bearish here, but it is due for a pullback. And
Right. Well, you see the the support at the 2011 top. Yeah, the line around, yeah, 1925ish.
mhm,
Um, I wouldn't be surprised to see it go all the way back there.
mhm,
But that's the kind of thing that gold does to you. But uh, I I wouldn't guarantee that's going to happen. I wouldn't bet on it.
right.
Right
I,
now, it is, it's uh, doing some pullback because it was really had a nice run of about, I don't know, 15% or so from the 1800 level.
yep, 16, almost 17.
Yeah.
So yeah, at this point, I have to say, I mean, I don't think that gold's going to collapse or anything, but it is due for a pullback. I, you know, I have a long-term position in GLD, and I don't plan. It's a buy and hold pretty much. But if I were starting to look into getting into gold, I don't think it's quite the time. I think it is due for that pullback, and an opportunity could arrive for us a little bit later if you're not already in.
Right. The daily PMO is very overbought for the time period shown. So, and it's kind of turning over, trying to turn over, certainly decelerating. And again, wouldn't surprise me if it goes back to 1925 or so.
Yeah, that seems like the 20-day EMA somewhere in here. That seems like the logical area to see a pullback. Let's see. Since we're on gold, I'll go to gold miners, and then we'll look a little bit at silver. Um, like I said, I ended up getting stopped out of Newmont somewhere in here a while back, and I haven't gotten back in because I like gold miners, but I think they're just like gold, due for a pullback. And now I'm starting to see what could end up being a double top here forming. I would like to see that this rising trend holds. It certainly could, but now we're looking at a few divergences here. The PMO has given us a sell signal now. So it's not real, again, you were talking about getting in new versus, you know, having held it. And I'm not a big fan of this particular area of the market right now. What's interesting though is silver. Silver's gotten pretty overbought, I'd have to say as well. But it seems like the interest is moving from gold into silver because it really, while it did, I mean, let's face it, it did have a great move here. It seems to me that people were more interested in gold. for the majority of the time. But silver certainly started to make its way out of that, and you can see that we're still seeing some acceleration going on. Of course, we closed up over 3% right now in silver. I think silver looks good. However, I believe that it's still going to be subject a little bit to the winds of what's going on with gold. And it could work in its favor if people start moving out of gold and then they want to stay in a metal. This might be the place that they might go to if they haven't gotten in there already. Because this is
Yeah, silver's like owning a 3x index on gold.
yeah. Here's a weekly chart of SLV, and then here's the monthly.
Really?
Yeah. So I mean, there's still upside potential, but and we did beat out this area of resistance, so I think that's positive. So I think there's still a lot of potential to the upside for silver at this point. But again, I'm not going to be recommending any diamonds based on silver just yet. All right, and then let's go ahead. We did talk about XLI, so I won't get too far into the weeds on that, because you did mention that as one that we're getting ready to get that buy signal from. But this is an area that caught my attention back here when we had that first breakout. And the only thing that was bothering me at that point was this overhead resistance. Well, today we've popped above it. So I really like this sector even more. And you can see the improvements going on as far as the indicators. It's great to see this many of the stocks, see that number of stocks, 93% plus. 93% plus with prices above their 20s and 50s. That's the kind of strength you want to see moves continue to the upside. And so I wrote the article Friday afternoon, but it's in the Chart Watchers, and I did send out a copy to all of our subscribers on Friday afternoon. And one of the things I wrote about, obviously, was I like this sector. And I covered on Tuesday before, so last Tuesday, I had covered Teledyne Technologies, and I do believe that was our Wednesday Diamond of the Week for the DecisionPoint show. And since then, it's done pretty well. I'll go ahead and just click on this to give us the most recent chart. But you can see we're still seeing that move to the upside. We've got the double bottom in play. We need to get it above the confirmation line here in order to make it, official, if you will. But, it's amazing, this double bottom, the upside target is right there at that June top. So I really liked Teledyne. And then the other one that I mentioned in here that I'll talk about today, because it would be our new diamond of the week, and that would be RBC Bearings. And like I said, I wrote about this. It had 3.25% plus move, but I still liked it. And one of the reasons I did, it looks very similar to that TDY chart. And you can see with that double bottom, and we're getting the breakout again too. But look at the difference in the OBV. We have a positive divergence that it's coming out of. And if you look at TDY, quick here, if I can get we do not have that same positive divergence. We have a confirmation, those aren't bad, but I do prefer to see these positive divergences. And we're getting that move, and we're getting the breakout up above that previous top. So I still like RBC Bearings. That is your diamond of the week, and I hope it all goes well. And that pretty much does it for us on the Decision Point show. We enjoy doing this every week, and stay tuned for the live trading room. Sign up for our free email list. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.